As an investor, understanding your risk tolerance is a crucial part of building a successful investment portfolio. In this video, we'll cover what risk tolerance is, why it's important, and how you can determine your own risk tolerance to make more informed investment decisions. So, let's get started. Risk tolerance refers to the level of uncertainty or volatility an investor is willing to accept in their investment portfolio. It's important to understand your risk tolerance because it helps you determine which types of investments are suitable for your individual needs and preferences. Knowing your risk tolerance is crucial in creating a well-diversified investment portfolio. By understanding how much uncertainty or volatility you are comfortable with, you can select a mix of investments that balance risk and return while minimizing overall portfolio risk. For instance, if you have a low risk tolerance, you may prefer to invest in lower risk assets like bonds or real estate investment trusts, REITs, to limit your exposure to market volatility. On the other hand, if you have a high risk tolerance, you may be more comfortable investing in higher risk assets like individual stocks or exchange traded funds, ETFs, to potentially earn higher returns. For instance, if you have a low risk tolerance, you may prefer to invest in lower risk assets like bonds or real estate investment trusts, REITs, to limit your exposure to market volatility. On the other hand, if you have a high risk tolerance, you may be more comfortable investing in higher risk assets like individual stocks or exchange traded funds, ETFs, to potentially earn higher returns. There are several tools and questionnaires available online to help you determine your risk tolerance. These tools will consider factors such as your financial goals, investment time horizon, and risk preferences to suggest a suitable level of risk for your investment portfolio. There are typically 3 levels of risk tolerance: low, moderate, and high. Investors with a low risk tolerance prefer low risk investments. Those with a moderate risk tolerance prefer a balance of risk and return. And investors with a high risk tolerance are comfortable taking on higher levels of risk for potentially higher returns. Your investment strategy should align with your risk tolerance. It's important to remember that no investment strategy is foolproof, and it's important to diversify your portfolio to minimize risk. Common mistakes include taking on too much risk without considering the potential downsides, or not taking on enough risk to achieve your financial goals. It's important to strike a balance between risk and return that aligns with your individual risk tolerance. Thanks for watching today's video on understanding risk tolerance. We hope you found it informative and helpful in building your own investment portfolio. If you have any further questions, feel free to leave them in the comments below. Don't forget to like and subscribe for more videos like this.